Hello and welcome to the Mutual Fund Guide. It's all about your funds and your returns. I am Muralidhar Swaminathan. As always, we will get answers to all your queries on mutual funds. We have with us Suresh Sadagopan and Vatsal Shah. Gentlemen, welcome to the show. But before we take the queries, I would like to bring to you the fund manager's stock pick for the month, for this week rather. Fund managers spotted TCS early in the game. Mutual funds added over 13 million shares of TCS to their portfolio during March. Once again, the timing has worked in favor of these smart fund managers. TCS is in news for crossing the $100 billion mark in market capitalization, and of course the stock is corrected now. The stock hit a high of 3,557, and then there is a bit of a correction. But what we need to note here is that mutual funds picked up the stock in a price range of 2,800 to 3,050 during the month of March. So which are these smart funds? ICICI Pru, HDFC Mutual Fund, Birla Sun Life, Axis Mutual Fund, Kotak Mahindra Mutual Fund. Some of these funds have managed to spot that, look, there is opportunity here and this is a growing stock, so maybe the timing was important. The point I'm making here is fund managers can do what retail investors will find it difficult. This is just an example of why retail and small investors should take the mutual fund route to invest in equities. Now let's go across to our callers, but before that, Suresh, Vatsal, I think the role fund managers play in picking stocks matters a lot. Though they will come out and advise us, retail investors don't time the market, which is very difficult for a retail investors to do. So what are your thoughts on stock picking by fund managers?
See, as far as mutual fund is concerned, it's a fantastic asset from the investor point of view, because they don't need to know anything.
Right.
There is a professional fund manager who actually has an analyst team, and through the analyst team, the professional fund manager is actually helping them to pick up the ideal stocks based on a particular objective.
Right.
So if I am a conservative investor, I could probably go for a hybrid fund, maybe a conservative fund or an aggressive fund.
Okay.
So I can go for a hybrid fund.
Right.
If my intent is say FD plus return, I can go for a debt-oriented fund or a debt-oriented hybrid fund.
Right.
So there are a whole range of funds which are available to suit every need of every investor.
Sure.
And without knowing anything, I can go to the trusted fund manager. I mean, there are thousands of funds.
Absolutely.
And trusted fund manager and invest the money and reap the returns.
I think which is what our mutual fund viewers want to know. We have Chandra on the line from Mumbai. Chandra, what's your query?
Yes, I'm Chandra Patel speaking. I would like to know in which ELSS fund should I invest? Is IDFC and principal tax good? And my second query is, I have Sundaram Money Market Fund and Tata Money Market Fund, DEF Fund. Should I hold or should I switch over to other friend?
Right. Thanks for calling, Chandra. Let me get our fund experts to answer that. Vatsal, would you like to take that?
Yeah. So coming to your ELSS funds, ma'am, I believe you can look at a fund which is a little bit of a larger size. So IDFC and Principal are more on the smaller AUM. So volatility will be there. You can consider, if you are a new investor in a ELSS, you should consider investing with the larger fund houses, Axis being one of the largest. Axis was the largest picker of TCS, as a percentage of the assets. So that is where it's been a significant, consistent performer. Coming to the money market funds, what I feel is, if it's a debt fund for a longer period, money market is really not the right product for you, because money market is for short-term money. You should consider investing in little higher yielding debt products or debt funds which have a little higher yield and a longer time frame to hold on to.
Right.
I have Axis equity tax saver fund. So can you suggest me other fund? In past, I have already invested in Axis.
Okay. So looking at already being invested, you can consider DSP tax saver fund. That has been managed very well consistently. If you want a little different growth flavor, then you can look at Motilal Oswal long-term equity, which is also a mirror of the Motilal Oswal 35 fund. So again, they are very growth-oriented stocks and a different fund management style. So you can consider that as well.
All right, let's go across to the next question. This is a mail that we have received from Arpit Modi from Sagar, he has mailed us this question. He wants to invest in infrastructure, metal and mining sector funds for a period of 15 years. What's your recommendation? Sector funds again.
Yeah, sectoral funds, I mean, I wouldn't really, I mean, let me come directly to the point. I wouldn't really recommend a sectoral fund if you are looking at such a long period like 15 years, because sectors again go through their own cycles.
Yeah.
And if the sectors are actually inherently good and you have spotted it, I'm sure the fund manager also would have spotted it, and he would probably bring that into the fund in any case. So my suggestion would be to look at diversified equity funds. I mean, depending on your risk appetite, it can be large cap, mid cap, multi cap. So I would really recommend you to look at diversified mutual funds, which will give the best possible return over a period of time, and you can leave the fund manager to choose which sectors, which subsectors he should invest in. So that's my suggestion to you.
Also, metal is a very cyclical versus being a structural growth story.
Absolutely.
So,
yeah,
15 years is not a right horizon for a cyclical industry.
Absolutely. See, which is why typically, if you see, I don't think there are any sector funds associated. Infra used to be there, but most funds have done away with that one because it's very risky. Infrastructure is very risky, so they don't want to take a chance there. And most of the sector funds are limited to banking and financial services, IT, then FMCG and pharma. These are the 4 sector funds. I think of the 4, pharma is slightly more risky at this time. IT must be doing well, but then I think for an average, for a good averaging and for a good growth, I think a diversified mix of different sectors would be that, as you said, the fund manager would look at it. So let's see if we can take the next query. This is again another email. This has come from Sandeepan from Gurgaon. He has mailed us this query. He has two-part questions. I have invested in SBI Blue Chip, Franklin India smaller companies, DSP BlackRock Micro Cap Fund, SBI Magnum Multi Cap and Franklin Build India Fund. What's the outlook? That's a large portfolio. That's question number 1. Second question, I want to add large cap funds to my portfolio. What's your view on Kotak Select Focus? He wants to add one more to the half a dozen he already has. I think sometimes people have the tendency to say that if I own 10 funds, I would be better off than owning 1 or 2 funds.
So our opinion is, whatever the size of the portfolio, 7 should be the maximum diversification. Be it 10 lakhs or 10 crores. That is the best you should go. Lesser is still fine. So, about 4 to 5 funds is what one should do. As I see his recommendation, he has a blue chip and a small cap and then a sectoral fund.
Sectoral fund,
What I feel is he is well balanced there, but he should probably look at adding just keeping multi-cap as his portfolio and do away with the rest. So he can actually trim down his sectoral fund. He can actually trim down his large cap fund, have a multi-cap fund, and keep playing with it keep investing in it for a very long time.
Because that will give you a better growth.
There is a slightly better alpha as you increase the time frame for a multi-cap fund.
He wants to know specifically about the Kotak.
Coming to Kotak Select Focus, in the large cap space, it is one of the best, very well managed fund. We've studied it and it is a consistent performer. So I would say it's a good fund. He should consider a reallocation into a multi-cap space versus just a large cap space.
Unless it's an SIP. He has to complete the SIP and then move on, I suppose. Right. Okay. Our next caller is from Bengaluru. Lakshmi Reddy is on the line. Lakshmi, what's your query?
Hi, this is Lakshmi here. I hold 3 funds, which I bought in last 2017, November and December. One is HDFC Balanced Monthly Dividend Fund. And the second one was ICICI, again, Balanced Monthly Dividend Fund. And another was Birla Sun Life 95 Fund. That was, I think, a quarterly dividend.
Right.
I bought at a very high NAV, but right now I think so they all have gone down a bit.
Right. So is this a one-time purchase you did, Lakshmi?
Sorry, sir, I'm unable
No,
to hear you.
is this a one-time purchase you did?
Yes. HDFC, I think my investment is around 15.5 lakhs.
Okay.
And ICICI is 12 lakhs.
Mm-hmm.
And Birla Sun Life is around 12 lakhs.
Right. So, as I understand, your query is what to do with these funds now.
Lakhs, I have another 16 lakhs in my bank, which I was planning to add up. So, I want your guidance.
Okay, great. I will leave that question to be answered by Suresh.
Yeah.
You want?
So, I mean, basically she has invested in certain balance funds.
Yeah.
And it looks to me that she's looking at, Lakshmi is looking at certain returns from that on a regular basis.
Right.
Probably that is the reason. So
Yeah.
now if the one of the funds, let me take one of the funds, which is HDFC Balance. HDFC
Right.
Balance is a good fund. It has performed well. She has invested probably at the height of the market at one point in time. So probably she is not seeing as much return as maybe another investor.
Right.
The second is when you are regularly getting the dividend, you don't see a lot of growth. Probably
correct.
that is one of the things maybe she has a query on. So if it is a dividend bearing fund, the NAV is not really going to go up because they are most probably going to give out most of the returns in the form of a dividend.
In the form of dividend.
So, but largely I don't see any problem with any of the investment that she has made except for the timing problem, which nobody can get right.
Absolutely.
So if it is a lump sum investment, I think we will have to stay with that. I don't see any real problem with the investments she has made.
This choice of funds.
I don't see any problem. If she has another 2-3 lakhs investment, she can probably, I concur with him, she can probably look at a multi-cap kind of a fund.
Right.
One of the funds I can think of is ICICI Nifty Next 50 fund. So it's a index fund.
Okay.
It's a good fund. I mean, it will give index-based returns, very low expense ratio, doing decently well, and has a reasonably good near-term performance.
But it's an ETF, right?
It's an ETF.
It's an index fund.
It's an index fund.
Index fund.
But
Not
you
an
have to
ETF.
purchase through
No, it's a normal mutual fund.
Normal mutual fund. Okay, it's
Normal
not an
mutual
exchange
index
traded
fund.
fund. Okay, Lakshmi, I think if you are clear about your objective, if you want regular cash flows, then that's not a worry, as Suresh pointed out. But if your objective is growth, maybe you want to switch to growth option.
Yes.
So that 5 years down the line or 10 years down the line, if you want to use a bulk amount, it's a long-term investment at the end of the day. See, this 3 months is too short a period to make a call and judgment. Absolutely. As far as mutual funds are concerned, especially balance funds for that matter. I hope your query is answered.
No, can I just add up
Sure.
one more
Sure.
question?
Yeah.
Right now I have 16 lakhs more to park. Shall I go in for again a balance fund, or shall I go in for the fund he suggested right now?
Yeah.
Vatsal?
I'll just take that. So, see, ma'am, if you are a little bit of risk averse and you don't like too much volatility, then a balance fund is good. But this time around, I would suggest not to go in for a dividend plan. You can consider a growth plan. And whenever you need the funds, say maybe 2 years down the line, 3 years down the line, you can start a monthly STP out. So that is a more tax efficient way to actually, organize the investment.
So that will be, you are suggesting she go for a systematic investment plan
No,
by
I'm-
drawing systematically every month.
every month after some time.
Instead of investing at one go.
Yeah.
You got it?
Okay, yeah, I got it.
Okay, all the best.
Thank you.
Welcome. We will slip into a short break. More investor queries and fund recommendations on the other side of the break. Stay tuned. Welcome back to the Mutual Fund Guide. It's all about your funds and your returns. Let's go straight to the next caller. Dharam is on the line from Bengaluru. Dharam, what's your query?
Yeah, so you see, I was looking at investing in ELSS funds for tax purposes in an SIP.
Right.
So I want to know that which would be the best funds to put my money into for a long term, maybe 10, 15 years.
Right. Okay. Suresh, you want to take that question? ELSS, long term, but through SIP, is it possible?
Yeah, it's very much possible.
Okay.
So Dharam, I hope you are investing in ELSS to primarily take advantage of, say, the ATC section. Otherwise, ELSS, you need not necessarily consider an ELSS fund. So I assume that probably you want to take advantage of the ATC section, because ELSS fund and a diversified equity fund are virtually the same except for the lock-in period. You can look at Aditya Birla Tax Saver 96. So that fund you can look at. IDFC Tax Advantage Fund you can look at. DSP Tax Saver. These are some of the funds you may look at. Franklin India Tax Shield. That's a fund which has performed well in the past. So there are quite a few good funds which you can consider. According to your need and how much you want to invest, you can choose 1 to 2 funds.
Right. That answers your query, I suppose.
So if I wanted to invest around 10,000, which 3 funds would you ask me to choose?
Yeah. If you are going to invest 10,000, let me be honest. I think you should choose only 1 fund.
Just 1 fund.
Okay.
Just 1 fund of the 3 are good, and you can check your existing portfolio. You can diversify, considering if you already have Aditya Birla or something. You can look at a different management style.
And is this 10,000 in a month?
Yeah, 10,000 in a month.
Okay, there is one more idea that you could try out. Instead of buying on a particular day once a month, spread it over 4 weeks, 2,500 into 4, so that you will get an average, better averaging. Instead of buying, say, on the 5th or 10th of every month, you may want to spread it to, say, 5th, 7th, 18th and 25th. So you will get a better average of 4 weeks over a period of month. So you just need to work a little bit on that one and say, I will divide this into 4, whichever fund you choose, spread it over 4. It's very easy to do, it's very simple. And there you will find that over a period of time, you are getting averages week on week as opposed to once a month.
Okay. First choice would be the Aditya Birla 96.
Yeah. So, I mean, I have given you 4 funds. I don't want to kind of influence you that Aditya Birla is the best fund or Franklin Blue Chip is the best fund. I mean, these are all good funds. It's not that in the entire universe there are only 1 fund or 2 funds which are good. You will have to really quickly go through maybe Value Research or Morningstar and things like that, and you can make up your mind and you can invest. So there are many good funds which are available in this space.
Okay. So let's move to the next question. Swapnil Joshi from Aurangabad has mailed us this query. He has 2-part questions. I have invested in ICICI Pru Dynamic Plan, that's a growth plan, and SBI Magnum Tax Gain scheme for a period of 15 years. Should I hold or sell? That's part number 1. Second question is, I want to invest in Franklin India smaller companies and Canara Robeco Emerging Equities Fund for a period of 15 years. What's the outlook on these 2 funds?
Yeah, so coming to the ICICI Dynamic Equity Fund, again, if you've invested in a lump sum mode and you are having profits and you are sitting on some profits, then it makes sense to book some profits. But if your horizon is 15 years, then I think you're too soon to actually consider selling it at all. Another point is that you have a SBI Magnum Tax Gain. So that's a very well managed fund, and you can continue to hold it. And if you have another ATC investments coming this year, this is a good time to start investing again in it.
Right.
My point for the next question, which is Canara Robeco and Franklin Smaller Companies Fund, both are small cap funds. Both are very well managed, excellent management. Franklin is a more stable management. Canara Robeco is also one of the best returns, but there is a key man risk. So the key fund manager, the moment he moves out, we have seen that in certain funds this actually has an impact. So you will have to keep a track of which fund manager is there, and because it's a small fund house, so you need to be little watchful on that fund.
Yeah, because that problem does not arise in a bigger fund house. They have a number of fund managers who manage,
and they have a lot of strong systems in place to maintain consistency of the fund.
Absolutely valid point. Let's move on to the next caller. Ravindra Kumar is on the line from Meerut. Ravindra, what's your query?
मैंने सिप कर रखी है म्यूचुअल फंड में.
ओके.
अच्छा, वो मान लो 1 साल में ही 1 साल के बाद ही उन पे एग्जिट लोन लगेगा, टैक्स जो लगेगा, या बीच में निकालने पे भी लगेगा?
और शॉर्ट टर्म एंड लॉन्ग टर्म के बारे में बात कर रहे हैं।
आई थिंक इज टॉकिंग अबाउट द एग्जिट लोड। सो अगर आप 1 साल के पहले बेचेंगे तो आपको उस पर एग्जिट लोड लगेगा। बेटर रहेगा कि आप जो भी इन्वेस्टमेंट कर रहे हैं 1 साल तक रहने दीजिए। उसके साथ ही साथ टैक्स भी लगता है, तो अगर 1 साल के पहले बेचेंगे तो शॉर्ट टर्म कैपिटल गेन टैक्स लगता है जो ज़्यादा है 15%, और 1 साल के बाद बेचेंगे तो 10% कैपिटल गेन टैक्स लगेगा।
ठीक है। Okay, let's move on to the next query. Kiran from Bengaluru has mailed us this question. He wants to invest 3,000 each through SIP in L&T Infrastructure, Kotak Select Focus and Franklin India smaller companies. I can hold for 15 years is what he is saying. Will I create a corpus of 1 crore?
Yeah, the funds that you have mentioned are largely fine, but over a 15-year horizon, investing 9,000 rupees on a monthly basis, assuming a roughly 12% return, will yield in the ballpark of about 45 lakhs. I mean, if I have to tell you that you will get 26% and 28% and all that, you will reach 1 crore.
Right.
But I think that is not the way we should look at it. I think long term, a 12% return with probably a good upside is the way we have to look at. 12% is a reasonable amount of return to expect from a pure equity fund. Maybe you will be surprised on the upside.
Right.
But probably this is not going to be met in my view. But I think we should not get too upset on that, because we are going to put only 9,000 rupees on a monthly basis. If we slightly increase the time horizon by maybe 2-3 years, he will still meet that
target.
Figure.
Yeah, so if that target has to be met, either you have to increase the monthly investment through SIPs or wait it a little longer. But still, it'll be a little tough reaching 1 crore figure, I suppose.
That's correct.
Yeah, what we recommend at 12% compounding, roughly the money will become 5 times in 15 years.
In 15 years,
yes,
right.
So we should invest about 20 lakhs in the next 15 years.
Right.
And that can reverse calculate.
Okay. We have time for one more query. I think we have, okay, we'll take this email. Ramesh from Hyderabad has sent us this question. He wants to invest in Kotak Select Focus, Aditya Birla Sun Life Frontline Equity, Mire Asset India Opportunities, L&T India Value and SBI Magnum Multiplier. He can hold this for 5 years. What's the outlook? How should we invest? One of you can take this question.
Kotak Select Focus is our favorite.
I think it's frequently appeared, incidentally. It's not that we are promoting that fund, but I think most of the queries have centered around Kotak.
Right.
Continue.
Right. No, the selection of the funds look well researched and looks a good set of funds, and I see no problem. He just needs probably if he is holding for 5 years, so he can actually analyze, and he can do a weighted average thing, like give more allocation to mid and multi cap and lesser allocation to large cap. So that's something he needs to just look at rather than equal weightage.
Right.
And he will do. I think it's a good selection.
Absolutely. You want to add anything to it?
Yeah. The only thing is, I mean, most of the queries which we get, there are 4 funds, 6 funds, 7 funds, that kind of thing. I think he made that point early on. I think we don't require too many funds to actually get the return.
Right.
What we require is maybe 1 or 2 or 3 funds. That's all. And yeah, I mean, once you put that portfolio in place, you review the portfolio once every 6 months or 1 year and see whether these funds are continuing to perform well as compared to the index and the category. And if it is not performing, only then you switch. Normally these funds, the good ones perform well for a long period of time.
Right.
And if there is a need, you can make the change.
Okay, one last question. I think we have Nikhil, who is on the line from Jaipur. Nikhil, what's your query?
My query is, I wish to understand if I invest one time lump sum, a lakh of rupees, and wait for 15 years in any of your desired funds that you will suggest me, and I go the same thing in an SIP route with the same amount, which is better and why? And which will give me a better returns. I don't want money for the coming 10 years.
I think
that's a good question. It's a very important question.
Very important question, and this will probably clear out a lot of other people's doubts. See, an SIP, the main idea of SIP is to get average pricing of the whole year, and market cannot go in one direction. It will always be volatile. So you are getting an average of the whole year, which is always better compared to a lump sum. unless if the market moves a one-sided 20-30% move, which doesn't seem likely at this point in time. So we are already entering into a volatile phase. I think an SIP is a much better approach than a lump sum and just waiting and sitting it out.
Yeah, lump sum, to add to the point, Nikhil, lump sum can always be a risk. It's like investing in the markets directly. You buy it at any point. Like we had a caller earlier in the show, she had bought during November when the markets were rising very sharply.
Yeah.
It was a lump sum investment, and I think now it must be down by 15-20% easily.
Absolutely.
So I think mostly it's always good to go through the SIP route if you have a long-term horizon, or you will have to time. Timing is very difficult, it's not easy, which is why I think it's always better to go through SIP. And Nikhil, thanks for calling us and asking us this question. I think that's all we have in this edition of the Mutual Fund Guide. It's all about your funds and your returns. I would like to thank Suresh and Vatsal for joining us and sharing their expert view, and all the viewers who have sent us their queries. We'll be back next week to answer more such investor queries. News and updates continue on the other side. Keep watching BTVI.